So I know, Mark, you're testing the HVMM. What would you say? What kind of a system would you say that would be? Is it a trend, a momentum and trend based system? Is it a counter trend system, or is it a breakout strategy? Momentum, yep. Shrilandra, you're on the same. It's pretty much trend slash momentum based. So if we look at the strategies or systems that are available to us, we know that we've got the Profit Accelerator, which is definitely a breakout system, and no dispute about that. We've got the HVMM, which is momentum based. We've got the Renko, which is a counter trend system. So we've got really a nice selection of all three of the main types of systems that we look to potentially trade. So there's no reason why, as we build our trade management plan and our money management plan, that we can't tweak things and customize them to give us this diversification that we need, really, can we? Because we've got those tools available to us, they're there. So when we get back to the question of what happens if your system or strategy goes into a drawdown, then obviously you're not making money. So what's a better option for us? Is a better option for us to say, all right, we've worked out our fixed ratio. We know what our money management plan is. Is a better option for us to just run with one system, one strategy, one market, or is it better for us to have potentially two systems running or two markets running that are uncorrelated, and then as we start to build our profits, spread our risk and our trading over a couple of different markets? Because ultimately our goal is to make sure that if we do have one system that starts to struggle, we get the lift up and that support to improve our performance. So that's what I want you to start thinking about, and we're going to talk a little bit about that tonight as well. So as I said, we hear this all the time, time and time again, financial markets. No one really shows you the process of how to effectively do this in your portfolio. So they talk about it, they offer you different, financial advisors offer you different asset classes to put your money into, but they don't put it all together as a powerful strategy. They don't talk about asymmetrical leverage. They don't talk about the growth potential. They don't talk about how to identify what your maximum drawdown is. All these things that we need to know as traders. They're the things that are critical for us, because we're starting to put together and construct a very powerful strategy, and we want to know how we can kind of achieve the results that we want using the process of portfolio and system diversification. So we're going to look tonight or today at two basic pieces of information to make comparisons. We are going to look at single market method versus a group of markets, systems or methods, and we're going to look at multiple single market with proper money management. So we're going to look at just a single market method, so basically just trading the one contract on one market versus a combination of those of markets. So no diversification versus diversification, and then we're going to look at, and this will more than likely be part 2 next week, how we can apply money management to that as well. So we've got multiple single markets with proper money management. So just combining the two and having our money management plan and strategy. Good evening, Michael. How are you? So we're just going through the money management program here. So single markets versus group markets. So let's have a look at system number 1. System number 1 trades on the bond market. It's netted a total of $41,718. This is over a 5-year period. So it's more a trend / momentum based system. Hasn't had a lot of trades, 127. 82 winners, 45 losers. Strike rate, are people comfortable with a 65% strike rate? Are you happy with that kind of a strike rate, or is it a little bit too low? You're finding your preference now is higher. What's your general feeling? It's not a huge strike rate, but it obviously is providing a good profit for that particular system and strategy. So 65. I mean, I think we spoke about it last week. I'm comfortable around the 60-65 mark. I don't mind that. As long as I've got a good reward to risk. If that's one of the keys for me. So have a look at the reward to risk here. Michael's very comfortable with 65. Now next week when we get stuck into next week and the week after when we start getting stuck into systems, I'm going to show you a couple of systems and strategies that have a 10 to 1 reward to risk. It's just fantastic. So I'm going to show you a couple of different strategies and patterns that are really doing well at the moment and that we're testing. So jumping back to this, so average winner 1,167, average loser 1,200. So what would your feeling be about the reward to risk there? If this particular system goes into a drawdown or goes into a bit of a rough run, as in it starts to have consecutive losing trades or consecutive losing streak, we're going to be in a little bit of trouble with this 1-to-1, aren't we? We're going to start to get brokerage and commissions chip away at that. So ideally for us, we want our winners to be 1.5 or 2-to-1, and there it's 1-to-1. So we've always got to maintain that 60% or better, because this is not net of brokerage. So this is net of brokerage. So that's not bad. It means that it is actually running reasonably well, but it's maintained a consistent win rate. So if that does drop, then that's going to be where we're going to see a significant impact on our profit. So average loser 1,200, ratio of average trade 0.97, the average trade win-loss draw 328, and our maximum drawdown is 5,968. So our maximum drawdown almost $6,000.